As a trader, you don't want to fall into the trap of confusing discipline with avoidance. You might think that by avoiding certain situations in the market, that's you being disciplined, or it might feel like the sensible thing to do. But really, deep down, what you're doing is avoiding discomfort. I'm Naomi. I'm a cognitive behavioural therapist by background and I trade. And in this video, I'm going to talk about what avoidance is, how it shows up in trading, and how you can break out of this cycle if you're noticing inconsistency in your trading. In psychology, avoidance is any behaviour that reduces discomfort in the short term but maintains the problem longer term. So, as a generic example, if you have someone who has a phobia or a fear of public speaking, they may avoid that situation. So maybe they might avoid doing a speech at their best friend's wedding. So in the short term, they have a sense of relief. They haven't had to expose themselves to that situation that causes them anxiety and fear. However, longer term, it maintains that problem. The fear of public speaking remains. In trading, avoidance reduces anxiety, it brings a sense of relief, and it can feel like the sensible thing to do. But unintentionally, what you're doing is training your brain to associate trading with danger. And I'm going to go ahead and give a few specific trading related examples for you to see how this manifests. So something you might relate to is seeing your setup, but then you hesitate, you don't enter the trade. You're hesitating and you're waiting for more confirmation, and then you miss the trade. But by avoiding, you've avoided fear of being wrong, fear of loss, fear of regret. Another way that avoidance can show up is, let's say, for example, if you've had a losing streak, you've had a series of losses, and then you might choose to reduce your size per trade, even though that's not in your plan, but you're doing this to feel safer. Another way that avoidance shows up is that you might in general just avoid uncertainty. So you may, when you're analysing the chart, you may be looking through multiple time frames, more than what's in your plan, just to get maybe even more certainty that your trade idea is right. So really over analysing. And all of these behaviours, they make you feel safer in the short term, but if it affects your trading execution longer term, your trading performance will not be consistent. So I'm just going to unpack the avoidance loop a little bit more so that you can see how this can become a vicious cycle. So it always starts with a trigger, a situation. So an example could be your setup appears. And then a thought goes through your mind, that automatic thought pops in that goes, what if I'm wrong? And then that leads to an emotion. You feel anxious. And then that leads to particular behaviours. What you do is you may then skip the trade, given how you're thinking and how you're feeling. And then that leads to a missed opportunity. And you skipping the trade, so that avoidance, your intention there is to manage your feeling. You're now just trying to neutralize that feeling of anxiety, but the avoidance doesn't solve the problem longer term. So you get a short-term sense of relief, but it maintains a longer problem of inconsistency and not being able to tolerate and expose yourself to trades, to uncertainty, and to the market. And so then the problem persists. As long as you avoid, you feel good in the short term, you feel good in the moment, but longer term, the fear remains. So like I mentioned earlier, avoidance can feel like discipline, but discipline is about staying present, not staying comfortable. When you avoid situations, your brain is rewarded with relief, but trading performance is built through exposure. Exposure isn't about reckless, impulsive trading. It's about intentional contact with discomfort. So in trading, that could look like taking your setup despite the doubt. It could look like holding risk with anxiety. It can also look like letting thoughts be present without acting on them. If you want to break out of this avoidance cycle, this fear and avoidance cycle, then you can do that through a series of exposure tasks or behavioral experiments where you deliberately expose yourself to that anxiety provoking situation. Deliberately expose yourself to the situations you are avoiding at the moment in trading. So for example, it might be around your entries. So whenever you see your setup, you might deliberately choose to enter the trade with your anxiety. And then after that, make a note of what happened. Did your anxiety rise? And did it fall again? Did you survive? Another exposure task can be about your exits. I know one thing that I struggled with when I was at the earlier stages of my journey was exiting trades prematurely. So before my exit criteria told me to, because I had a fear of losing out on floating profits. So one exposure task you can do is say to yourself, I'm going to deliberately expose myself to my exit criteria. I'm going to stay in this trade until my rules tell me otherwise, despite how I'm feeling whilst I'm in that trade. And again, it's just making a note on what you noticed. How did you feel? Did your anxiety heighten, but then did it reduce again? What happened? And another exposure task that you can set for yourself is around changing your relationship with your thoughts that you have. So when you have fears and worries popping in, when you're thinking, oh, what if I'm wrong? You can choose to deliberately sit with that and not do anything with it. So maybe previously you might have the thought, what if I'm wrong? And then it leads to avoidance in whichever way that looks for you. But you can choose to notice that thought and not do anything with it. Just let it be there. And again, it's just about observing and making a note on what you notice when you actually sit with discomfort and expose yourself to these situations that you've previously been avoiding. It's important to remember that confidence doesn't come from avoiding discomfort. Confidence comes from learning that you can handle discomfort. Avoidance will shrink your trading performance and your trading world, whilst exposure will expand it. The goal isn't to feel safe while trading, because uncertainty does feel unsafe to us most of the time, but it's about trading whilst feeling unsafe. If you recognize avoidance patterns in your trading, it's not an issue with your motivation levels, it's a psychological one, and this is fixable. I talk more about this in my content on my channel, as well as in my course Embodied Trader, which is linked below. If you found this video helpful, please do give it a like and subscribe for more trading psychology related content.